For more on the Nvidia results and how the latest earnings from the company are expected to affect markets, let's welcome in Brian Colello, Morningstar equity strategist. The stock is not doing a heck of a lot at the moment, Brian. We've kind of seen it bouncing around a little bit as investors await the call. What do you think this sort of indecision is reflective of? What does the market need to know that it doesn't have certainty on here?
Yeah, that's a great question. And to the prior point about some of those exponential moves, that was very much during a time, let's say 12, 15, 18 months ago, where we didn't understand how much hyperscalers were going to spend on AI. So I'd like to think that the street and investors have sort of caught up on sort of the exponential boom. And so that way there hasn't been a ton of movement in the stock price, because I think we at least understand the near term that Nvidia Blackwell product is very popular. They're going to sell everything they can, and hyperscalers are going to spend this year. So I think that's pretty much been priced in the near term.
Brian, on the Q1 gross margin guide here, they're calling for between 70.5 and 71.5%. Consensus, Brian, was closer to around 72.1%. So that does undershoot. I'm curious what you make of that, and more importantly, Brian, I'm just curious what do you see as the trajectory of margins for Nvidia?
Yeah, that's my biggest concern and my biggest question going into the call as well, that it's only at 71%. I was even higher than that consensus piece. It does speak, we think, that the Blackwell products are expensive, that they're going to sell quite a lot of them, and it's high, obviously the highest performing product, but whether it's cost at Taiwan Semi or cost to assemble, they're going to be a little more costly for Nvidia, and they can't pass that full price on to customers. So we do think that's an issue in the near term. And I think they've signaled too that really as Blackwell ramps, it's not going to be as profitable on the margin front, on the gross margin front, as Hopper. Hopper is probably peak margin for Nvidia in our view on the gross margin line, because you had just the boom with a relatively more mature technology. Looking forward, low 70s are still a great gross margin for Nvidia. If they're able to maintain that long term, I think the business will be just fine. But yeah, I think you'll have some ups and downs, and at the start of a new ramp, like something like Blackwell, you're going to see a little bit margin deterioration.
That's really interesting, Brian, because we've been talking about that whole margin question. There's also the question about the DeepSeek impact, because the thinking is that they'll be selling more chips to DeepSeek, right, and to those who are deploying DeepSeek in China. But that also, I imagine that product has a little bit different of a margin profile.
It could. It hasn't been noticeable whether it's been it hasn't had significant margin deterioration as they switch from the H100 to the H800 to the H20, and to the extent they sell more, yes, those will be lower priced chips, but it's still hard to imagine that Nvidia doesn't retain the pricing power to pass them along. I think still the larger picture is that we are in this AI race, and companies will spend what they need to build the best products. So even as we think about DeepSeek and that sell-off a few weeks ago, the main concern at that time was that we're going to get slimmer models and fewer large build-outs. And if you listen to the hyperscalers, that slowdown isn't happening yet. They're going to take the best of DeepSeek, apply it to their own models, and continue to throw massive GPU clusters at it. And Nvidia's results in the near term don't really show that slowing down either, and neither do the CapEx plans for the cloud companies in 2025.
Brian, I'm curious too. U.S. export controls. What's the possible ramifications, the impact, Brian, for Nvidia?
It doesn't look like much based on this revenue. I mean, we'll be interested in hearing more on the call. I suppose, if we were trying to make a bet on, guidance and whether it'd be down significantly or not, you wonder if there would have been a dent in sovereign AI spending with the sovereign governments based on controls. I would say medium to long term, we're not expecting a lot of revenue for Nvidia from China. Now, maybe they continue to sell H20s and equivalents going forward, and it's a piece of the pie, but to us, the build out the future of AI, there's a lot of potential risks and rewards over the next couple of years for Nvidia. China is not something we're counting on as far as a big bounce back, as far as a repeal of any regulations or anything like that. We think of Nvidia very much as a U.S. story, and to the extent they sell anything from China, that's good news in the near term. And the sovereign governments that may not be allowed to sell into them. I still think of it more as a hyperscaler story.
And Brian, you've got a $130 fair value estimate for the stock. That's right around where it is right now. Why don't you think that there is more upside in the short term?
Yeah, so I would say there's upside in the short term based on the high CapEx spending of the hyperscalers and Nvidia's supply constrained and selling everything they can for 2025. And then I'm also, quite bullish on AI as a technology at large. So those are very much the rewards for any Nvidia investor, and nothing I just said is a surprise in any way. But the risks, as we saw, whether it was the DeepSeek sell-off, the use of custom in-house chips, whether this spending will continue, at what point do the hyperscalers optimize spending? If you think medium to long term, what's the growth trajectory look like? And so at 130, again, going into the call, we'll update our numbers later, but at a 130 fair value estimate, we think that balances the potential high rewards of AI, but also the potential risks of slower CapEx spending, growth not coming to fruition, more use of in-house chips. I mean, the way we think about the hyperscalers is they are completely reliant on Nvidia today, and they have all the incentive in the world to not be reliant on them in the future. And we'll see when that crosses over. But that's why I guess I'm relatively cautious on valuation at this point.
Brian, great to have you on the show today. Thanks so much for joining us.
Thank you.